Hello, YouTube. We now have 4 in a row, or 4 down days that we have had on the SPY, or the S&P 500. The big question is, where are we going to go from here? Because the market is completely neutral. In previous times, when we went down by 5 candles, we led to a reversal. The last time we had 4 red candles, we also had a reversal. So what I'm really wondering is whether or not these 4 days of consolidation are enough that going into CPI tomorrow, we're going to be getting a true move. As of right now, we can note that the market is completely neutral. It is deadlocked here at roughly 50, which is neutral. Again, we're looking for a push either into greed or a push back down into fear. What's the reason why? Well, normally this time of the year is really boring, and the market has been very boring so far for roughly the first third of the month. We can note that here by just looking at the SPY monthly chart. And again, I'm looking for the psychology chart to repeat here. We'll leave a link at the end of the video to watch where this comes from. But basically, we have a supply and demand pocket between roughly 407 and roughly 420. That goes back to, I'm going to zoom in now just to make it a little bit easier to see. And what I would note is it's holding the uptrend perfectly. It is also price discovered higher as a higher high and a higher low. And it is now almost all the way back to where it opened. We can note the month opened at 409, and 412 just seems to be that North Star. Again, what they've managed to do so far is to suck up about 400 million shares just on SPY in liquidity. And where do we go? A whole bunch of nowhere. So the question is, again, what are we going to do tomorrow? Because the market is currently in a period where we don't really do anything. We've had 4 red days in a row. And my bear thesis was that my bull thesis to stop the bear market was that we were going to have the Fed pivot, we're going to have a shallow recession, and we're over the 50 DMA. Well, we've blasted off from the 50 DMA now. We are substantially higher. As of right now, again, you can note that the blue line is going to correspond with the blue number, so we're looking at 393.71. And from that current area, we're currently up by about 5%. What is high is about 6. So that's pretty decent. And one more thing to point out is why would 412 be so important? And I think the reason why is because, think about it, 412 is 3% above 400. So let's pretend we get a big old nasty reaction tomorrow. How much plunging do these bulls got to do? Well, we could go down by 3%, which is going to be what we had today times roughly another 8. That's a lot. And we really have to lose about 380 to really start getting bearish. That is going to be the monthly low at 410.64. So again, pink means important. So the pink important line starts at this monthly low, which goes back to February and corresponds with 410.64. Really not all that complicated, right? We go up, we come back down, and now we are in a deadlock. There are some things which are giving me a little bit of concern here. I'm actually also going to tell you that I am currently positioned for, I don't know what's going to happen tomorrow. So I'm fully hedged. I'm hedged probably a little bit, just a little bit over neutral, which means that I don't know where we're going to go tomorrow. I just want to protect my account. And the big guys are going to be fighting it out. So I am not going to try to predict which way we're going to go. I'm more ready to react to the move. So I expect we're going to go to higher tomorrow, but I'm going to watch for the technical levels. And we'll touch on that a little bit more here. So again, I'm fully hedged right now. And I'll tell you the reason why. There's actually a clue from our system, which we're going to be relaunching soon, which actually flashed a warning today after, again, I gave the red alert warning on the weekend. So what do I have next here? So we note that we have right DXY and TNX breakouts. I'll touch on those in a moment. We could get deep recession risk fears coming back tomorrow if we get a big negative reaction to the CPI number. So I'm going to come back to that. But just for the sequence of data coming out, we got CPI tomorrow pre-market. We got Thursday, we got PPI or Producer Price Index at 8:30 pre-market, jobless claims pre-market, and then on Friday, I believe at 10 a.m., we got consumer confidence. I missed that one. So that'll also be really important. So what it means is that Wednesday, Thursday, Friday, I'll have a really important data point. But normally this list has been full. There's only 3 data points here. Why? It's a light data week, which is great. And going into tomorrow, again, this is from Bloomberg, again, the source that I trust the most for news. It tells us that U.S. inflation expectations dropped sharply in New York Fed survey. What does that mean? It means the consumer confidence numbers from yesterday, actually, from the 8th, which they're talking about today, are showing that people are feeling good, right? I encourage you to pause the slide if you want to read it. Numbers look good. So this also goes into account here again. We're looking for inflation expectations. So this is exactly what the Fed wanted. They didn't want to have anchored inflation expectations. And this pretty much shows that we're seeing a decrease here, we're seeing a decrease here, which is a big win for the Fed. Also important to note that the pain trade is still on. So sell everything. Hedge funds are betting against bonds and stocks in a serious way. You can see the red arrows just means that they're continuing to add on to their bearish positions, and they think the market's going to go down. So if they think the market's going to go down, oh, right, this is going to be very interesting. Why? Well, again, we're right at neutral. We've gone a whole bunch of nowhere. We've come back down to 412, which is our pivot, and we're going to find out what's going to happen. So now I'm going to touch on these key points here. So we can note that we got DXY and TNX breakout. So ironically, I'm now going to talk about our alert system a little bit called the algo.com. And I'm going to leave something free at the end of the video, so make sure you stay tuned. So what I'm showing here is, again, this is our alert system. It's a little bit complicated, but we're trying to simplify it. What I'm looking for here are certain stocks. I'm looking for SH, PSQ, RWM, and DOG. So what these are inverse ETFs that when SPY, QQQ, IWM, or DIA are starting to go down, that's what we're looking for. So our system looks for reversals, and a reversal on an inverse ETF means that S&P, QQQ, IWM, and the Dow were overbought and now could potentially go down. A swing time frame for us is good to roughly, I think it's roughly, I'm actually not even 100% sure. I think it's like, this could be good for up to like a month or two. So if this could be good for up to a month or two, what it means is that that's kind of exactly what I'm looking at here where, well, what if we crash land back down on our 50 DMA? That's what this is flashing here, that we're due. Again, if we're going to drop, well, the recipe's kind of set up here. And that's the reason why I'm hedged, as I noted before. So what this is telling me, and I think that providing some context here will actually make it better for people to understand. DXY and TNX had alerts last week. So these are one of the things that get me bearish. DXY and TNX going up. And I noted that record inversion on the weekend. DXY is also right around 106, 106.3. My breakout area is 106.56. So, right, literally going up by less than 0.5%. We're breaking out. The yield curve inversion is back to 1.17 here, and it's all green. The inversion's going up again today. So even though I am bullish on the market for, I don't know, for the rest of the week, if we get the confirmation, I already see some of the recipe for me to, again, get a little bit concerned or hedge. I don't want to be net short. I don't want to bet which way we're going to go. And right now we can note that, again, these are still flashing. They should clear up here. I'm recording it right after the market close. This one just means that it's currently above the alerted price. So SH, or inverse buy, is currently below by, it's actually below by about 4 cents. DOG, or inverse Dow, is down by about 6 cents. And the IWM is down here by about 5 cents. These are whisper alerts too, which means that they would be due for continuation tomorrow. And since we're so close to the alerted price, but not quite above it, this just means that it's flashing a warning. And what that means is that the S&P, again, was overbought and now is starting to fall back into a normal range, which means it's vulnerable to going down. It does not mean it will. It just means it's vulnerable. So because my system, which we've built and has been very reliable, and you can click on the link in the description to learn more about that. We should be relaunching in roughly, I don't know, a couple of weeks, maybe a month. But for tomorrow, I want it to be tilted bull, but I want it to be bear last week, which means I'm flip-flopping, and I've done really well in roughly the last month and a half. I don't want to give any of my profit back. So I'm going to let these guys duke it out. I am hedged, which means that if the market goes up or down, I should have a muted effect. It shouldn't really do anything to me. I've been building up a significant long position and more than 50% invested now. I just don't want to be super risk on going into tomorrow when I'm not sure which way we're going to go. So in terms of whether or not you were already protected, what you need to know for tomorrow, and what I'm going to walk you through now is the areas of which I feel confident to keep my hedge on and start unwinding my long positions, meaning trimming or exiting, and at what point I would know that we're going to be going back up. So I'm now going to flip over here to the weekly chart, and again, just bear with me. There's a whole bunch of lines on here. I'm aware. So we're going to hide all these, but we're focusing on these two boxes right here. We're looking at this one right here, and then we're also looking at this one right here. So let me just hide everything, and I'll just bear with me, and I'll walk you through it. So to make it simple, actually, let me see if I can do this. Let me delete all the lines, and I'll bring them back. Hopefully this will work. The control Z was not yesterday. This right here was the pattern we were looking for. Now we're looking for the opposite here, which is what basically forms a cup and a handle for continuation. So because this is still the pattern we're looking for, I was actually looking for a move down to roughly 409 today. Didn't quite get there, right? All we touched was roughly the low from here at about 411. We got down to 410. But what this means is that I'm looking for the inverse of this pattern where we crash landed. We went from 416 all the way down to 360, right? Woof. Yeah, that's a big slam. I'm looking for potentially the same size move, but to the upside. So if we're looking at the same pattern here where we're consolidating, what I want to know to confirm that I'm still correct is that we're maintaining a higher high and a higher low, which means we can't go below 406.82 tomorrow. We cannot go down into 405. We close below there, I'm probably wrong. And we are due for a pullback. The algo call is calling it. Is it correct? I don't know, but it's flashing a warning. And my job is to decipher or try to figure out what it's telling me. And what it's telling me is, hey, well, maybe you're wrong about this higher low, higher high. Maybe it's actually going to leg back down. Where? I don't know, 400, could go down to 380. I don't know. So that's basically what I'm looking for tomorrow. If we maintain this pattern, meaning higher high and higher low versus the lower high and lower low over in this section, and I'll bring all my lines back now, what it tells me is that we're due to go up. And I'd be looking for a move to every round $5. So 407.6 is splitting the difference roughly between 415 and 420. So we made it up halfway between 415 and 420. I would look for 420, 425, and 430 after that. I don't know how big the move's going to be tomorrow. We could do a whole bunch of nothing too. However, the entire everything for me is saying up. And even one of the biggest critics of the Fed, Larry Summers, is saying that we're potentially going to be getting a positive number tomorrow. Again, he has an asterisk beside his commentary, but this is what is getting me excited. The monthly is tight AF, right? It's so tight, but we've price discovered higher. We're basically flat on the month, down 64 cents after being a third of the way through, and we're right here. We've now coiled up. Like I mentioned before, the coil is coiling up. It's tight, and it's going to explode. That's what I anticipate. Is that what's going to happen? I don't know. It's what I anticipate, though. One of these is going to happen. I also see that as we're getting into a tight, narrow trading range, the volume's also dropping off, which kind of confirms that the coil is getting tight. So what I'm going to leave you with now is, again, the fact that we can note that this is how many alerts we've had so far this week. There's not been that many. Last week we had hundreds. And my point here is just that if you want to find out more about this system, I encourage you to click on the link in the description. But I'm actually going to leave you with a call to action because what I'm trying to figure out is whether there are easier ways for us to label these different alerts here. So let me know by going to thealgo.com/contact. I will leave this in the description, also in the top comment. What I'm going to do is I'll leave it in both of those. And if you want to just go here, type in your email, type in your name, and type in either early or whisper. So what I'm trying to figure out is right now the stock market is trying to whisper to say, watch out tomorrow. What I'm just trying to figure out is whether a label that says whisper or a label that says early would be more accurate for someone who is maybe not super savvy on our system. If you prefer to leave a comment, that would also be fine. But if you do go to thealgo.com/contact, we will enter you for a raffle and do a draw tomorrow on the stream. Thank you so much for watching. And if you want to watch more, there'll be a video that queues up here in a moment. Otherwise, wish you all the best of luck in the CPI tomorrow. And remember to smash a thumbs up, drop a comment, and make sure to subscribe to the channel. Thank you for watching.